Hey, welcome everybody to the 40 Finance channel. Today I'm going to talk about Amazon stock, which recently reported their Q2 earnings. There was a little bit of disappointment in the air for once for Amazon stock, and if you go around the internet, you might even catch a few negative outlooks on Amazon stock going into 2022. So we're going to talk about it. Amazon is a stock that I own. It is one that I believe in. But we're going to talk about the challenges that have recently come up. And most importantly, where do I think Amazon's stock price will land near the end of the year? Reminder, as always, that my stock picks and projections are just my opinion for your entertainment. Please make sure you do your own research. And of course, if you like stock market content like this, going deep on individual stocks like Amazon, as well as looking ahead to other prospective names, please give this video a like, subscribe to the channel, make sure you catch all the videos. Thank you very much for your support. All right, so if we look at Amazon stock from the recent bear case perspective, there's a couple things to call out. One is free cash flow went down significantly in this quarter versus last quarter. The next thing you might see some rumors on is the prospect of Amazon's earnings and revenue maybe coming down a little bit in terms of growth rate. You're also probably going to see a few analysts lower their revenue expectations for Amazon into the next couple quarters. We've actually seen Amazon themselves come out, which I'll highlight here in a minute, and say like, hey, we see our growth rate, certainly in North America, our growth rate declining to the mid-teens going forward, calling out, of course, like we can all expect that the COVID year had an abnormal effect on Amazon and really spiked their growth rates. And now, of course, consumer patterns are changing, so perhaps the growth rate will come down a little bit. Then lastly, sort of like a psychological effect, in my opinion, is we had a Prime Day sale in Q2 this year, and usually when you put that thing in, the expectation is that they're just going to blow away earnings, and here they came up a couple $2 billion short, roughly 2% on their revenue goal short of expectations. So I think like seeing that during a Prime Day quarter, just in my opinion, has a little bit of a psychological effect as well. All right, so here's the earnings summary for Amazon, okay? The actual EPS was $15.12. That beat by $2.83. The revenue is where we saw the shortfall. The actual was $113 billion. This was a miss to analysts' expectations by minus $2 billion. So again, roughly 2% on the revenue miss. Now, what that's consequently come and done is you see upcoming quarter's earnings, and the reason I waited a couple of days to talk about this is to let some of the news catch up. The announced date would be around Halloween. The EPS estimate actually goes down in Q3. The revenue estimate now is also falling, and you can see the difference in analysts' opinion. EPS up revisions, only 4 are up, and 27 of them have actually come down. So expectations for Amazon's EPS and revenue are declining. See the stock price today at $334. Is this a good time to buy Amazon? Well, I would say, you know, like a handful of other big companies, I don't know that there's a bad time to buy Amazon. But as we get further along today, we're going to talk about this price and where that price may actually sit when we get to the end of the fiscal year when they report into next year. All right, so I led things off talking about the free cash flow that I have a feeling you're going to see a lot of analysts really harp on. But here's the situation. Operating cash flow, $51 billion in Q2 of 2020. This year, 2021, $59 billion. Now, what has changed? The purchase of property and equipment and net proceeds from sales and incentives, that was only $19 billion a year ago. This year, It's up to 47 million. Most of this increase, as you saw also in Q1, is the addition of CapEx or beginning to build out the next phase of Amazon. So building for the future, but when you get all the way to the bottom line, it leads to a drastically different free cash flow as you see down here. So some folks are going to focus on this, and that's not a problem. They're going to be concerned that these two numbers have actually went down, I believe it was 97% year over year. So in response to the free cash flow talk, let's take a look at some of the quotes from the transcript of the earnings call. This is during the prepared remarks section. And this is from Brian S. I don't know how to say his last name, so I'm not going to try it. But he says, I'll finish up with some comments on our ongoing investments in operations. As we think about the pull forward in demand we've seen the past 18 months, it is required and will continue to require a significant amount of investment in our fulfillment network. Our teams have done a remarkable job stepping up to serve customers, and we've worked hard to increase capacity at a rapid rate. For the trailing 12 months ending in Q2, CapEx and equipment finance leases increased 74% versus the prior trailing 12-month period. Goes on to say, as usual, most of our 2021 spend and building openings are planned in the second half of this year. This is all part of a multi-year investment cycle for us. Unit volumes, while obviously growing at lower rates of last year's large comp, continue to remain high, and we see strong demand for FBA and third-party sellers. So there's more work to do, including additional build-outs of our fulfillment centers, as well as our middle mile and last mile capabilities to support our fast improving delivery offers for customers. All right, so let's put this in perspective. We're not talking about Amazon negative comping revenue year over year. We're not talking about negative growth. We're talking about slowing growth into the mid-teens is what they're speculating. So anytime that a company comes out and says, we expect growth to slow down, and what Amazon is saying is particularly Q2 and Q3 of this year probably have the biggest challenges, but the comp challenge could continue all the way through Q1 of 2022. And if you think about where we were with COVID, with lockdowns, with vaccines, that world did continue on into January of this year, if not February. So now that consumers have more options, that sort of absurd growth rate that Amazon was seeing last year has just pulled back, arguably to normal levels that we've seen over the past year or so before COVID even was a thing. All right, so now let's try to project ahead on Amazon's stock price going forward. There's sort of two things we're going to need to do that, right? One is the earnings per share. So we'll need at least a projected earnings per share, and we'll need a projected price to earnings ratio to try to figure out where this thing will land. We'll start with the P/E ratio over here on Yahoo. Right now in their books, they've got a trailing P/E of 58. They've got a forward P/E of 55. I did some quick math and came up with about a 59, but it's hard for me to tell which forward earnings number they are using. Nonetheless, we are looking at annual chart here, right? And if you just go back the past few years, back to 2015, I can tell you one thing is right now, this is the cheapest from a valuation multiple standpoint. This is the cheapest we've seen Amazon in a while. And if you think about a forward PE, if it is indeed 59, you haven't seen that since late in the year of 2019. So at least on a PE basis, there is an argument that perhaps the stock is cheap compared to where it's historically traded at. Price to sales, the 3.85 is about in line with what we've seen in the past. If anything else, it might be a couple decimal points ahead of the historic average. All right, so let's take a look at our earnings estimates. This is by fiscal year on Seeking Alpha. The great thing about large companies like Amazon is they have so many analysts who do this work. So coming to a consensus gets a little bit easier from an average standpoint. And here we go, heading into the end of 2021, and the EPS estimate, our consensus estimate, is 53.63. That would be year-over-year EPS growth of 28%, and it puts a forward PE heading into the end of the year at 62. Now, we are here in August of 2021, so really, our forward PE should probably be looking into 2022, so that's what I'm going to be focusing on. Seeking Alpha has a consensus EPS estimate of 68.84. That's another 28% EPS growth, by the way, if they were to hit that number, and that puts a forward PE of 48. And remember, we talked about 59 or so being a historically low forward PE, and I wouldn't say it's exactly apples to apples because we're about a year and a half out, but you can see the opportunity. All right, now on price to sales, this year, revenue estimate, $476 billion, plus 23% year-over-year growth. That would put forward price to sales at 352. Now, if we start to incorporate fiscal year 2022 into our forward look, you've got a consensus of 562. That might be a little high. That might be spot on. Again, Amazon saying mid-teens. But if it did land at this plus 18%, you got a forward price to sales of 298. If you were to hit this number, that would be the lowest price to sales that we've seen since 2016 out of Amazon. Granted, it is a forward one, but if you invested today and you were to hit this number, you'd be looking at a relatively low price to sales given Amazon's history. All right, let's take a look at TipRanks and see what the best performing analysts think for Amazon. And despite some of the negative clouds that some analysts are taking on this one, across the board on the best performing analysts, I mean, it's straight line buy. Looks like, most of them are in the plus 4,000 range. I think everybody's at least 4,100 as I just eyeball it here. That would be 23% upside. Keep in mind, this is 12 months from now is when they're supposed to issue these targets. I'm actually going to accelerate my target a little bit and try to hit the number the stock will reach after their earnings report in January or February of 2022. All right, so here's my projection. This is Amazon on August 2nd. Current price about $3,330. Forward PE today at 59. 21 analyst EPS projection, about $56. Fiscal year is normal, runs January through December 31st. My price projection, which is basically going to hit either in January or February of 2022 when they report the full year, I'm anticipating the forward PE valuation multiple is going to stay about the same because Amazon's at such a low one for them right now. I'll say it stays the same, and I have analyst EPS projection at 73. I rounded it up slightly for myself, so 59 for the multiple, 73 earning per share. That equals $4,307, and that is my price target for Amazon into February of 2022. All right, so bottom line from my camp on Amazon, I love the long-term setup here, and this company is not one that I have any concerns about in the short term. In fact, the reinvestment into making delivery better, it just kind of propels the bull case even farther. Oddly enough, here in Cincinnati, where I live, we just started qualifying for the Amazon Fresh, which is like the same day delivery thing with the grocery store and whatever. So I'll have to do a test order on that and see how it goes. And the funny thing is, through this whole video, never once said Amazon Web Services, AWS, oh, by the way, it's growing just fine. Not a lot of slowdown being seen there. And you factor in switching costs and how much data they hold for corporations and companies. That thing is just subscription software type revenue that continuously goes on forever. So no matter how you slice it, even in the short term, I see Amazon getting to or above $4,000 probably by February of next year. So there is some margin. If you've been sitting on the sidelines thinking about Amazon, I would say that there's still plenty of opportunity left. And if you're going to hold it for 5 years, then why not start today? All right, guys, so that's my take on Amazon. Let me know what you think in the comments. Give the video a like, subscribe to the channel, all the things. Thank you very much. We'll see you on the next video.